Hey, big and exciting things. John Melvin, Regional Manager with Equus Financial, coming to you real fast, real quick. I want to talk to you about something attractive, something sexy, something you're going to like. I want to talk to you about how to buy money. Yes. I know, you're thinking like, wait a minute, John. They only teach us how to buy houses. They only teach us how to buy cars. They only teach us how to buy $1,000 cell phones. You're going to show us how to buy some money? That's what I'm going to do, so stay tuned. So the key thing is this. When you think about how wealth is going to be passed on, do you know anyone who struggled from one generation to another generation to another generation? You know, you probably have, maybe not you, but you probably have like friends or family, you know, grandma struggled, you know, mama struggled, the kids struggled. So what happens is we're going to stop that. Like, we're going to stop the family tree where everybody in the family is going to struggle financially. We have the perfect way to stop it, and that right there is buying money. Because when you buy a $300,000 house, your mortgage is what, like $2,500 on a $300,000 house, but you don't even own the house. All you did was buy a promise to pay 360 payments. And if you don't, they're gonna come and take that house back. When you buy a car, you buy a $50,000 car, your payment is $500, but then you're paying $500 to pay off that car, but you're paying another $200 to insure the car. Wait a minute, man. Why would you insure your vehicle? You're gonna insure your vehicle because you don't want nobody to hit you on the side and you be subject to paying for that $50,000. Well, here's the deal. If you had a toaster in your house and every week the toaster popped up $2,000 a week, every single week, like clockwork, you walk in, the toaster popped up $2,000. If you found out you could insure that toaster because appliances don't last forever, would you insure that toaster? Yeah, because if you could insure that toaster, say for $100 a month, for $100, I'm guaranteed to get my $2,000 a week. Yeah, that makes sense. So here's the juice. The juice is you are the toaster in your family. Your family depends on you to pop up every single week with a check. So you probably already have insurance on you, but we want to tweak the concept a little bit and talk to you about how to buy more money or how to buy money. Okay, so watch this. Let's say you have a 35-year-old male and you have a 35-year-old female. So let's just say husband and wife, okay? And they're going to buy $1 million of cash. Okay, so they're gonna buy $1 million of cash. Now, I've already used the calculator on how to do this. Okay, to buy $1 million of cash is going to cost the husband about $108 a month. The wife is going to pay about $87 a month for $1 million of cash. We're going to use a term policy for this example. You could use either term or permanent. It's up to you. It's up to the clients, and basically everyone's situation is different. If you've ever heard somebody say like term insurance is the only way to go for everybody, can you tell me another thing on this good earth where one product fits the 100% of people, the whole population? I don't know one thing that one size fits all. I don't know one thing where one product fits everybody. I mean, come on. So how can an insurance product fit the whole world? Like that sounds like a sales concept. Because maybe you only sell term. I don't know. Maybe you don't understand. I don't know. But when you do buy your term, it has to have two things, non-negotiable. Okay, non-negotiable. It has to have a conversion option where you can convert that term to a permanent policy with no questions asked. And when you convert in the future to a permanent policy, you get to keep today's health. So if, let's say you get preferred rating today, and then let's just say years down the road, before the term expires, you get into a bad health situation, your health turns for the worse, and you don't want to have your family go without coverage, you can convert that term to a permanent, and you have to keep the health of a preferred rating person. They can't look at your current health. So if your term doesn't have that option, get out of it. The next thing your term has to have is your term has to have the living benefits. Now, some terms have like terminal illness only. No, you need all three: terminal, chronic, and critical. You're covered for heart attack, stroke, cancer, renal failure, organ transplant. You're covered for if you can't perform 2 of the 6 daily living activities: toileting, bathing, eating, drinking. You're covered if you need terminal illness. You're covered. So if your term doesn't have that, if it's just death insurance only, meaning you have to die for your family to get a check, give me a call, okay? So Now, we want to use term insurance for this example, but remember, we're not using just death-only insurance. We're using term with conversion and living benefits attached to it. Now, the $100 a month, what we're going to do is you want to times that by 12, you're going to times that by a 30-year term, and then you want to take the $87, times that by 12, times that by 30 years. It's going to come out to be about $70,000 that the husband and wife is going to pay for $2 million of coverage for this $2 million. They're going to pay about $70,000 for the $2 million. Now, if you paid an insurance company $70,000 over a 30-year time frame, do you really want your term to expire without the opportunity to convert it, to keep them on the hook? Nah, I want to make sure that I can convert to a permanent, even if I have to lower the death benefit to make it more affordable, you know, because you get charged based on the age you are at, but not on the current health. You get charged on the health when you first purchased the original policy. So I'm not letting my term go. And if anybody ever tells you that you don't need insurance forever, where do you do that at? So you mean to tell me when I'm young and healthy, you want me to pass the risk off to the insurance company, but then as I get older, my health starts to decline, you want me to retain the risk? Where do they do that at? Not in my house. You see what I'm saying? So what happens is you definitely want to make sure that your term option allows you to keep the policy, so that way you keep the insurance company on the hook to make sure they pay your family, okay? Now, we're going to take that $70,000. Let's just say the husband were to pass away first, okay? Because men usually die before women. So the man passed away first. That means the wife is going to get that $1 million, put that inside of an interest-bearing account, right? And when she puts that inside of an interest-bearing account, it's going to generate about 5% return, okay? Now what's going to happen is, real conservative, she's going to receive about $50,000 in income on an annual basis, because 5% of that million is $50,000. $50,000 in income on an annual basis, not even touching the what? Principal. But now the wife is going to pass away, right? Now when the wife passes away, essentially what they're going to be doing is they're going to be leaving $2 million to their kids. Let's say they had 2 kids. That means each child would receive, they're going to put that $2 million inside of an interest-bearing account. Why? Because they learned money principles from their parents, right? And when you learn money principles, what you're going to do? You're going to stick, because these are concepts we're going to teach the generation. This is generational wealth. Wealth is intergenerational, you know. But what happens is this: they're going to take that 5%, and that's going to generate them a $50,000 income on an annual basis each, okay? Now, what we want to do with that 5% is they want to live off of it, of course. They got jobs. But now we're going to take the insurance company money, which is that $50,000, and we're going to go ahead and buy more money with their money. Yeah. Yeah. So do you know anybody that's ever struggled from generation to generation? But listen, not no more. See, we're going to stop all of that. We're going to bring this to the community and talk about buying money, because when you buy money, see, on $1 million home, your payment is $7,500, but on $1 million policy, your payment is $108. Buying money just makes sense, baby. It just makes sense. Now watch this. Watch this. So now these kids are going to each buy $5 million of coverage, right? Because why? They can. Because they're not even using their own money. They're going to take, they get $50,000 of income. Let's just say if the 5%, I mean the 5 million at their, let's say 35, cost $450 a month. That's like $5,000 a year. Between the both of them, that's like $150,000 of monies paid to the insurance company. But would you pay $151,000 for $10 million tax-free? All day long, I'm buying money. So what happens is this: now they're going to get they're going to have 2 kids of their own. So now the family will have $5 million. Okay, so let's get rid of this $5 million plus the $2 million right here. Okay. So when they pass, they got $12 million. 5% of that is 600,000. What that means is each child would receive 150,000 of income for life. Each one of their kids. Now guess what they go and do? They go and take a percentage of that 150 every single year and go rebuy what? Money. Listen, we're going to change the game with this one. See, we didn't do this to sell insurance. We didn't do this to make an income. We didn't do this to make a, for as a career. We did this as legitimately the way that we're going to teach families how to catch up. Like we're in this industry, I retain knowledge so I can be a resource. This is the way we're going to catch up, and this is the way that we want to teach families how to catch up. If you have a term policy that doesn't have the conversion options, if you have a term policy that doesn't have the living benefits, if you just only have a death policy, definitely reach out. If you have any questions about setting something up like this for yourself and buying money, definitely reach out. This is what they don't want us to do, is understand the importance of true life insurance, not burial insurance, not just getting buried and just getting by. We're not going to settle out of court. See, when you got a good case, you don't settle, you go all the way. We're going all the way. We're not going to get like 20,000 of coverage, 50,000 of coverage, 100. We're going to go all the way, and we're going to buy as much money as possible because we're trading little checks for big checks. Thank you much for watching. John Melvin.